We're going to do a brief video on meta stock analysis, and of course that's Facebook. We're taking a look at a daily chart with a 5-day moving average in green, a red day moving average, a 20-day moving average in red, and a 200-day moving average in blue. Let's take a quick look at this stock and see what's going on. This stock today is down. Meta's down 11 bucks so far, and it's not even 10:30 yet. It's down about almost 7%, 6.75% on 10 million shares. Its average volume per day is about 28 million, so it's a really active stock today. Again, down $11 before 10:30 on September 13th. Let's take a quick look and see what's going on here. We notice here back in late December, early January 22, the stock broke a 200-day moving average and just tanked. We had a huge gap from right around in here somewhere, 317-ish, all the way down to 248. So it's a huge gap for a company like this, and put it in a bear market, and it's been in a bear market ever since. You can see we haven't had a tremendous amount of respect for a 20-day moving average. In some cases, the 5-day moving average has been respected better. So the stock has trended down from about April of 2022 down to about June of 22. Again, not much respect for the 20-day, but you could catch some respect and catch some declines using a 5-day moving average. However, it's consistently, as you can see, been significantly below the 200-day moving average, and that's the issue it's running into right now. From about June, the end of June, till today, September 13th, as I record this, we've got too much space between the 200-day moving average and the price. So that's going to necessitate one of two things happening. You're either going to get a rally like you got here to reduce this space. You just cannot have that much space between this moving average. The market's going to push the price back up, or it's going to push it sideways to run into it, and that's what's going on right now with Meta. This Meta stock is not necessarily trying to get out of its bear market right now. It's in a bear market. It's just trying to figure out what to do. So for the past 3 or 4 months through the summer, it's been oscillating at around the 170 level, as you can clearly see. Hasn't really done a whole lot. The moving averages haven't been much help at all. The red 20 days been flat, and when a green oscillates back and forth like that, it's not worthless, but it's not great. You know, it's not the best way to trade using that 5-day average. You can do it, but it's not the greatest way to trade. The 20-day on a stock is usually hugely helpful, and you can see it's just flat, doesn't help us at all. So Meta is working its way over to, a good Meta stock analysis is that it's working its way over to the 200-day. And the problem is this distance, as you can see, 172 to 221, you know, it's 50 bucks. So there's too much room here. And so my best guess on this stock is we're going to continue to trade sideways. And it's hard to see on this chart, but this drop here has been updated. Let's see. It's showing 157 is the low today. Let me check another quote screen, see what it says for Meta. Yeah, 157. So that's roughly accurate. So, but you can see that's still not down here to these lows. 154 lows made in June. So it's still trading in its trading range. As bad as it sounds that it's down $11, it's still sideways. And so this stock's sideways, probably going to stay sideways until one of two things happen. Either we're going to get a great rally up to this 200 level at some point, or we're going to make new lows in this stock. Right this second, it's almost impossible to tell. If you scrunch this together, this sideways movement has gone longer than you would expect if it's going to sell down. I would have expected it to break down at the end of August if it was going to break, and it didn't. So my best guess, and this is just a pure guess, I would say it's slightly above 50-50, is you're going to get a rally here to the $200 level, probably sometime in October, maybe the first week. Now, I realize that's a huge statement to make, but it's just all my opinion and for entertainment purposes only. But this stock's got to give the market something to think about, and people are going to force it to do that. So the traders are going to jump in this stock and see if we can't push it to the 200-day moving average. The alternative is they get on it and sell it short and push it down to about the 135-ish level. It's hard to get it to go visually, to get this chart to go down that low, but to about the 135 level. Now, getting to the 135 level and stabbing down there is certainly possible. This stock's in a bear market. It's below the 200-day. It's below the 20-day. The 5-day is inconsequential. So price is definitely in a position where you could see a tremendous drop down to 135, which today would be a $20 drop. That's totally possible. And I wouldn't discount it. I just wouldn't put it much more than a 40% chance right now. So 40-50% chance you get a decline, but I would say, 50 to 60% chance that we get a rally approaching the $200 mark by the first week in October. Keep in mind, all my opinion, all for entertainment purposes only. Let's take a look and see what RBAM Research says about it. We covered this stock. We cover it still as Facebook. We got to change it, but that's of course Meta stock, and we're saying no entries at all today, which is consistent with what the market's doing. No entries means there's no long position. We don't offer shorts on this particular algorithm, and so it's just stay out of the market today, and that was a good call because the market is down 7% as we speak. Let's go down and take a look at our this is all trading algorithms that do not involve trends. Let's go down and take a look at our trend following system that we have down here in beta. We put this up for YouTube viewers only. It's not on our regular website. We may put it up in the future, but let's take a look and see if we cover Facebook. Maybe we don't. Did we cover Meta? We do not cover Meta on this. We cover about 10 or 11 stocks on this, including the S&P 500. The S&P 500 today is down roughly 100 points, and so the market has been bearish. And you can see Apple, Tesla, and Ford, all these stocks, our trend following systems came up with shorts today, except for the S&P, which showed flat. So that's basically how these algorithms work. On the ones I showed you earlier, we have 1, 5, and 20-day holding periods. That's worst case. So in other words, if you were to your own analysis were to indicate that these prices were something you were interested in getting in the market at, you buy today, get out at the close of business tomorrow, one trading day, at a loss, or take your profit as soon as you got it. Same thing for the 5 and the 20. If you went in the 20-day column, you'd get in at roughly this price, assuming your own analysis says it was a good idea, and then you'd close out at a loss 20 days from now, or you would take your profits as soon as you got them. Keep in mind, these are for entertainment purposes only. You have to do your own analysis, and you can't use our prices for anything but entertainment. If you'd like to get these, we put them up every morning before 7 a.m. Monday through Friday at rbamresearch.com. We put up, in addition to the stocks, the major forex pairs, BTC crypto, and the most liquid futures contracts. They're all absolutely free, no credit card required. And again, there's a link in the description below. You just go there, sign up, and you get them absolutely free. Please leave us a comment in the comment section below and let us know the answer to the following question. Do you like technical analysis or not? If you don't like it, tell us why. If you like it, tell us why you do like it. We'd love to hear from you. We use moving averages to quickly explain the markets to you, but we're interested in your feedback. Please leave us a comment one way or the other. We'd love to hear it. If you like these videos, please click the like button. If you want to see more, please subscribe. And keep in mind, everything you've seen on here is for entertainment purposes only. You have to do your own analysis. You can't use our opinion, our analysis, or our entry prices for anything other than entertainment. And you definitely trade at your own risk.